So good afternoon, everyone. I'm Marquita Wiley, and I'm hosting our regular Friday afternoon Innovative Business Advisors webinar. Again, welcome to everyone, and let's go ahead and quickly get started. I want to share with you what we're doing today. So we essentially will be presenting to you updates relative to the multiple programs that are available, those that we refer to as the CARES Act from the federal government, and a couple other programs that are available. Steve Denny will be doing the lion's share of that presentation, and as always, Terry Lammers and I will be available to answer questions. If you have questions throughout Steve's presentation, feel free to type your question into the Q&A box, which is at the bottom of your screen. Reminder, we're on the Zoom portal. Zoom's Q&A portal, if you will, is at the bottom, and it's literally labeled Q&A. So we'll be answering those questions throughout, and then we'll recap those questions verbally or live on the back end. We do have a short agenda again today. Those of you who were with us last week realize that we had a short agenda last week. We're not getting as much update information, but we are getting update information. Steve will go over all of that. I believe his presentation will probably not take more than 15 minutes, so we'll open it up for questions following that. Think about your questions, and you will actually determine how long this webinar goes. The Q&A will actually throttle the back end of the of this webinar. So with that said, I'm going to turn it over to you, Steve, and you can move forward with the presentation.
Awesome. Thank you, Marquita. And again, thank you very much for giving us your Friday afternoons to moderate these presentations. So let me get going here. Quick agenda for the day. We're going to talk about retirement plan withdrawals. Significant updates happened this week. We'll give you the details regarding that. We're going to go back over PPP forgiveness application. We've had several questions over the last week as well, and maybe there's a couple of points of clarity that we can help you with in that area. SBA EIDL loan updates, another quick update on the Mainstreet lending program, and then we're going to talk about the weekly IBA webinar series. So let me jump right in. Just as a point of clarity, if you have not received PPP loans and it is something that interests you, want to call out that Tuesday is the last day for applications. There does not appear to be any legislation on Capitol Hill that would change that as we sit here today. Who knows what will happen in the future, but as of right now, the Paycheck Protection Program loans are due to expire from a loan application process on Tuesday, June 30th. So if you are thinking about it, it's time to move. You only got a couple of business days left. So let me dive right in and talk about guidance on withdrawals from retirement savings. And the IRS issued two notices this week that changed the rules in two different areas. We're going to talk a lot about the withdrawals side. So if you have money in a 401k, an IRA, other qualified retirement plan, you can now access up to $100,000 of that money without penalty. And I'll cover a couple of those rules. The other thing that the IRS issued guidance on was on required minimum distributions of your retirement savings programs. So if you happen to turn 70 and a half this year and are now required to take minimum distributions, the IRS has made some significant changes to that. We're not going to cover the details of the RMDs today, but we will supply in the attachment on the YouTube channel the actual IRS notices. So if this applies to you, you can pull that notice down and go through it. But let us cover what happened if you want to make withdrawals. So if you have retirement savings available to you, under the CARES Act, you were allowed to take a withdrawal of up to $100,000 with no tax penalty. And if you put the money back in, if you weren't ready to retire, so let's say you were 55 years old for the sake of example, and you wanted to access some of your retirement savings to help you through this pandemic process, you could take up to $100,000 out with no tax penalty. And if you wanted to put it back into your retirement account, you had 3 years to do so without receiving any type of taxable income um, requirement as well, which would mean if you had taken it out, you would have to add it to your income and pay taxes on that as well, since it's typically sheltered income. So what the CARES Act said was that rule applied for you or your spouse or your dependent if you were directly affected, meaning that you had or were diagnosed as either having SARS, COVID-2, or COVID-19. What the IRS came out with this week and changed was they said that you didn't necessarily have to have any of the viruses. What you only had to have was to experience an adverse financial consequence. And they gave several pages of explanation about what adverse financial consequences were. And in general, so I'm giving you guys the crib notes here. What they said is if you've been quarantined, furloughed, laid off, or had your work hours reduced, or you were unable to go to work, that's a qualifier. Now, if you fit any of those circumstances, you could access your retirement funds without penalty. Also, if you were a business owner and your business was closing or you had to reduce the hours of your business, that's another additional qualifying step that you could, that would allow you to access some of your own savings. If your pay or your self-employment income was reduced, that also was a new qualifier which allowed you to access that. Or if you were between jobs and had a job offer that was either rescinded or your start date was delayed, that also became a new qualifying event which would allow you to access your 401k savings. So, you know, there are certainly people out there that don't like to take loans, that like to become self-reliant. And if you had some savings in a tax-deferred retirement savings account, now there is almost any reason available within the confines of what we've just covered, which would allow you to access those funds now from a tax-free scenario. And if you then do so, you have got 3 years to put the money back in the account without any tax consequence to you at all. So it's really a pretty major change to the rules. And what I would say is, if this is something that may appeal to you, I would strongly encourage you to talk to your accountant or your tax advisor about your specific situation and make sure that you're able to certify that you fit within one of these buckets, because that's the requirement from a tax reporting standpoint that gets you off the hook with the IRS. So again, we'll attach the full IRS notices on the withdrawals and on the required minimum withdrawals, 2 different IRS notices. We'll put those with the replay of this webinar. And if anybody's got questions about this, we may be able to handle some of your questions on this particular call. There are some additional clarifications that Department of Treasury and the SBA is releasing. So we know there are going to be more clarifications to provide you in our next webinar. We know that they have been prepared. We just have not been able to access them yet. And we're waiting on some of our contacts to share that information with us. But did want to go back and cover a couple of things on the PPP loan forgiveness application that we do know. So as we talked about before last week, there are 2 new application forms to use when you apply for forgiveness on some or all of your PPP funds. So the first is an EZ application, and you qualify to use this as a borrower if one of 3 conditions are met. So you don't have to meet all of these conditions, but you do have to meet at least one of them. So the first condition is, are you self-employed and have no employees? If this describes your situation and you had a PPP loan, congratulations. Now you get to use the EZ application for forgiveness, which should be much easier to complete for you. The next circumstance is that you are a business that didn't reduce the salaries or wages of your employees and you did not reduce the number or hours of your employees. And there are certainly businesses that fit this category as well. So you may not be self-employed with no employees, but you may be a business where you did not adjust wages or hours or number of employees. And if that describes your situation, congratulations. You now get to use the easy application form. And then the third condition is you may have experienced reductions in your business activities, but again, you didn't reduce salaries or wages or your employees by more than 25%. So, you know, the hope from the SBA's perspective is that the EZ application will make it much easier for the vast majority of applicants. Keep in mind that there are about 4.5 million, more than 4.5 million businesses that took out one of these PPP loans. Getting the loan put a big burden on the banks up front, doing all the paperwork to give you the PPP funds, and they're trying to make the forgiveness application process a little bit easier. And this EZ application may actually work out well for many, many small businesses. If you don't fit any of these three conditions, you do have to use the full application. And it's now 12 pages, so a little more information is being asked of you. Not all that difficult, but that's the scenario that is currently in play. Let's move over to SBA Economic Injury Disaster Loans. So remember, the SBA Economic Injury Disaster Loan is an SBA direct loan. These are long-term 30-year loans that are designed to provide businesses with funding that help them get back on their feet and do so with a very long repayment period at a very low interest rate. And there are not real restrictions on how you can use the money. You can use it for just about anything within your business, but you cannot use it to refinance existing debt. You can use it to make your debt payments, but you can't refinance your existing debt with this. The one big thing here is that based on all of the applications that are in the queue and the remaining amount of money that the SBA had allocated, they are now limiting loans to a maximum of $150,000. So you might qualify for 150, you might qualify for less, but know from this point forward that that the maximum you can get from the SBA Economic Injury Disaster Loan is 150,000. But the bottom line is they're open and back in business, and the application window is available. So here's the link. If you have not taken advantage of this, remember, we say that this is absolutely some of the cheapest insurance you could put in place for your business. So very easy application. It's all online. The SBA generally gets back to you within a couple of weeks. There is a grant portion of this still. We're getting some mixed signals about whether or not grants are actually flowing, but we do know that the loans are still happening. And we had people within our community that received confirmation this week that they've been approved for loans. So if you haven't taken advantage of this, take a real good look at it. You know, these are non-recourse loans. These are no prepayment penalty associated with it. It's very inexpensive money. And if you're a business owner, you know, it might be a good idea for you to strongly consider, take the loan, put the money in the bank. If it turns out 6 months from now that you don't need it, that your business is going to be just fine, you're going to get through this pandemic well, then turn around and repay the loan. There is no prepayment penalty. So it would, you know, the only thing you'd be responsible for is a very little bit of interest during the period that you held the funds. So it's something that really is a prudent way for business owners to think about making sure their business has got plenty of cash into the future. And we recommend you take a good look at this. So next, let me move into Mainstreet Lending Program. It is now open. The Federal Reserve has said this week there are several hundred lenders that are now approved to administer these loans. So the big difference here is that these are lender-delivered loans. So it's very much like the PPP program. You have to go to your lender, the bank or other lender that you normally deal with, and ask them, are they now approved to administer the Mainstreet Lending Program? These are generally designed for small and medium-sized businesses that are in sound financial condition. So you may not have taken the PPP or EIDL loan in the past, but you might already have some business debt. And these are regular commercial loans, but they're at a very low interest rate. The really nice feature about these loans is they can be used to refinance existing debt. So why would you want to take one of these loans? You know, maybe a good example would be, let's say you're a business that purchased your building in the last several years, and let's say you purchased the building at $1 million and you've still got a significant note out there, but that note is at an older interest rate, which might be 7.5% or higher, right? Now, under this program, you can refinance that debt. You have to take out a minimum $250,000 loan, but the current interest rates are approximately 3.3%. So very, very low rates. The issue is that the loan term is not all that long. It's only a 5-year loan. But if you're a business owner with some long-term debt, this gives you an opportunity to refinance it into a lower interest rate, reduce your payments, actually get a deferral period. And again, we don't know what the next year might bring in terms of, are we going to get a second wave or anything like this? But this might give you a way to save cash, conserve cash in your business. And yes, it is for a short period of time. But if you're refinancing things like equipment, real estate, et cetera, all of those things are typically financeable. So, you know, you could refinance that into a lower interest rate now under a 5-year term. And as we get through this economic recession and pandemic experience, maybe 2-3 years from now, you turn around and refinance again into a longer period of time. But in the interim, you're able to save some cash, keep some extra funds available to get you through the thin times. And, I would say to you, it's a prudent way to think about this particular program. So we shared this with you guys last week. We want to pull it back up again. There are some relevant adjusted EBITDA calculations that are in play in terms of determining what your available loan is. And if this is something that you think might have some application for your business, Marquita, Terry, and I would be delighted to engage with you and walk you through some of the base calculations of how it might work well for you. And then we are beginning to talk with lenders in the marketplace and get a good feel for who's going to be able to deliver these loans. So in case it's not your lender, we may be able to refer you to somebody that could help you in that regard. So that gives us kind of the updates on all the programs that we've got into play. And believe it or not, folks, here we are getting ready to bounce up on next weekend is July 4th.
Do we want to answer some of the questions? We have a couple questions out there before we move ahead of what we're going to do moving forward.
Sure.
One, Sean's asking, can I use the easy form if I did not reduce the number of can I use the easy form if I did not reduce the number of employees? I did, but only because I offered their job back and they decided to retire. Do I qualify to use the easy form?
As we understand it, the answer to that is yes.
Yeah, because it had to be like a 70, or there was a forgiveness piece in there. It's like as long as you're within 75, right?
And as long as they had, they've got to have some written confirmation that they made the job offer back to their folks and that the people didn't return. So they do have to have a written confirmation of that.
So another question from Christy. Do you know how quickly the SBA processes the repayment to show the loan satisfied? Can you confirm the EIDL cannot be spent on fixed assets? So that's kind of a two-part question there.
Okay, so first question is related to PPP.
I would assume, yes.
Can you repeat that first part of that again?
Do you know how quickly the SBA processes the repayment to show the loan satisfied?
Yes. So, well, I know what the SBA guidance is. And once you submit, as the borrower, once you submit your forgiveness application, your lender has up to 60 days to make a decision on that. But keep in mind, folks, that the lenders don't get the money from the SBA or their fees from the SBA until they submit your forgiveness application. So I think it's a pretty safe bet that lenders are going to move pretty quickly in terms of processing the forgiveness applications. They're
Yeah,
going
it's
to want to
probably,
get it into them.
probably another thing too, where you got to realize they're going to get hit with a flood of forgiveness applications. So it'll probably play through much like it did on the front end of this, getting things approved. So then the second part of that question is, can you confirm the EIDL cannot be spent on fixed assets?
So the only thing that we know that EIDL cannot be spent on is it cannot be used to refinance existing debt, right? So I think it can be used to buy fixed assets.
Scott asked, where do I receive a copy of the easy form?
We included it last week in the replay, so you can go to the YouTube/Innovative Business Advisors and get it off of that replay. And Scott, we'll put it up on this replay as well. So we'll put the easy form, the full application, and then the instructions for each. So there'll be 4 attachments.
So Sean asked another question again. So can I qualify for the easy form because I have written proof that they retired? However,
Yes.
my employees at the time of the loan was 5 and now it is 4. Won't that throw a red flag on the easy form?
Well, yes. So if I understand what he's saying is his FTE number is different than it was at application, but he has written confirmation that he made the job offer, but the person didn't come back. So yes, under that scenario, he would be able to use the easy form.
So Christy, I think you're a little confused here. So how quickly will the SBA show the EIDL satisfied if you had the loan and decided you did not need the money and paid it back? Have you heard some unfortunate stories about it taking years? Well,
No, but I would say, here's what I would tell you is if you take an EIDL loan that is for more than $25,000, they are going to file a UCC, a general lien against your business, right? And yes, typically it does take, I mean, every bank, if you buy a piece of equipment or lease a piece of capital equipment for your business, if you take out a significant line of credit, typically lenders always file those UCCs against your business. And, in our experience, you can usually get those cleared up within about 30 days. And the SBA might be a little bit longer as a government entity. And it does take diligence and determination to make sure that those things get released. So there might be some horror stories out there, but we do this pretty routinely when we're helping people buy and sell businesses, and generally the process flows pretty well.
Yeah, I would agree with that. Terry, I was told if you had an EIDL and the PPP, your EIDL would not be forgiven. We received $10,000.
So they're referring to the EIDL grant.
The
grant.
EIDL grant.
EIDL.
Yeah. So
the EIDL is not forgiven. The grant is forgiven, but the EIDL is a loan. So if you don't use it, you can pay it back. But the EIDL is a loan. But I would actually, I would encourage you not to pay it back right away if you could in any way use the cash, because it's got a 30-year amortization rate and like 3.5% interest and a 1-year deferment. So if you need the cash, it's cheap money.
So if you received an EIDL loan, so I'm going to give you an example. Let's say you got the $10,000 advance grant, right? When you received your EIDL loan, you received for $100,000, let's say, they actually granted you a loan at $100,000. They actually sent you $90,000 on the backside and gave you loan documents with that $90,000 payoff. So you're responsible for that $90,000. The $10,000 is forgiven. Now, I think what she may be referring to is on the PPP loan, full loan application, it asks you, did you receive an EIDL grant? And if so, how much was that for? And what the SBA has said is that if you received an EIDL grant, they're going to reduce your forgiveness on the loan by the amount of that grant.
Right. Yeah. So,
So Terry, let's take a minute and talk about this a minute more. And Steve, I really do want to get your opinion on this and Terry's, because I want to make sure there's a little subtlety here on the EIDL. So you apply for the EIDL, you receive a grant related to the application for the EIDL. Then you receive approval for your EIDL, and then you go, aha, you learned based on what the SBA sent to you that your DIDL is approved for X amount. You have paperwork and you have the opportunity to sign and take that loan and have the cash come to you to actually originate the loan. You can decide at that point not to take the loan. You don't have to take the loan and then pay it. Is that correct?
That's
Yeah.
correct. They make you an offer of a loan, right? They make you an offer
Correct.
of a loan. So we have heard, and we've had some of our clients that have received an offer of a loan, and they've gone back and said, no, I need more, for the sake of example. I need a larger loan. And the SBA has granted them that. And we have had other clients that received an offer of a loan and turned it down and did not take the loan. So you're exactly right, Marquita.
So we got another question. In March, as the economy slowed, I withdrew under 100,000 from my IRA to address cash flow issues as the COVID-19 effect hit the economy. I loaned this to my business, a C Corp, to assist the cash flow issue. Would I qualify for 3 years period to replace that?
Under the current IRS notice, the answer to that would be yes.
Correct.
Yeah. Confirm with your tax professional in that regard, and we'll provide you with on the replay of this with a copy of that notice.
Yep. So, Christy, I hope I think we finished, or we answered your question or your comment about the grant money in the PPP. So, all right, that covers all the questions for right now. So,
yeah, with that, Steve, I think you can go ahead and move forward with your next. Yeah.
So my EIDL just got put in my account. Never did I receive anything from the SBA. Thought this was going to be forgiven. Yeah, well, Terry, it sounds like that was your grant for the $1,000 per employee. Then you received your PPP funds. So that $10,000 at that time, based on 1,000 per, yeah. So then that $10,000, like Steve said, is going to be deducted from the forgiveness of your PPP loan. So.
Ooh, they're coming in fast and furiously now.
I love it. Keep them coming. It's great. If you got any questions, keep asking.
That's what this is for.
This apparently is from Ford Magazine. SBA approving economic injury disaster loans. What you need to know. They also provide a longer list of funds that loans cannot be used for: dividends and bonuses, disbursements to owners unless for performance of services,
correct,
repayment of stockholder principal loans, expansion of facilities or acquisition of fixed assets. So that's the question you asked earlier. Repair or replacement of physical damages, refinancing long-term debt, paying down, including regular installment payments, or paying off loans provided or owned by another federal agency, including SBA or small business investment company. Payment of any part of a direct federal debt, including SBA loans, except IRS. Relocation, however, you can request written consent to that. You know, there's some of them on there I agree with Steve, and some of them that I don't. And to be honest with you, just because it came out of Ford Magazine, I don't know that, that's etched in stone. So.
Absolutely. So you're 100% right, Terry. So you got to refer to your loan documents. If you're going under the EIDL program, refer to your loan documents. Remember, this is economic injury disaster loan. So if for those that just went through the floods in our area last year, the 2019 floods, there were approximately 500 businesses that were affected by the floods. Think about East Alton for the sake of example, right? They were severely affected. And basically, if your business has gone through a disaster, those funds are to help you rebuild your business. So I do question the fixed asset side of it, but in terms of the dividends and paying off other loans, yes, we were aware of that.
Yeah, but if you're in a distressed situation, it was my thought process that you could use the EIDL to make loan payments.
You can use it to make loan payments, but you cannot use it to refinance existing loans.
So the other thing I think that's important to remember on this is that there's no reporting requirements on the EIDL loan. So we're not going to tell you to use it for things that are specifically not supposed to be used for, but at the end of the day, there's no reporting requirements on it.
Yeah, you're going to sign a loan document that's going to dictate the terms of the loans, right? That's you do have to agree to the use of the loans, but again, I do dispute the fixed asset side, but everything else that she read about, I think sounds right, and we may be wrong. So we're just telling you what we think at this point.
Yeah, no problem, Christy. So, okay. So she follows up with a question. I'd love to buy a building, but don't want to violate the terms. Well, kind of in a way that does violate the intended purpose of the EIDL loan.
Right.
If you was going to say you're going to buy a fixed asset, like a piece of equipment that needed to be replaced, that now you couldn't replace because of COVID and maybe your sales are down a little bit, but if you didn't have that piece of equipment, then it might put you out of business altogether. So, if you want to go buy a building just to buy a building, that's really not in the spirit of the loan.
What's really interesting here, Steve and Terry, is as I think about these restrictions or lack thereof, the bottom line is you've got two sources of cash coming into the business, and probably multiple, but we want to talk about the two. One being your revenue, normal revenue from business operation, and cash from the loan, the loan proceeds. And at any point, you could allocate many of these expenses to your normal revenue up to the point that you use up all of your revenue. There's nothing to say that because you make an expenditure on any of these that the loan was the source of the funds. Normal business revenue could be the source of the funds, and you could allocate your payroll or something else to the EIDL loan. Is that not fair?
Yeah, I think that's a fair comment. The other thing that I would say, Christy, is you could still go out and get an SBA 504 loan for that. And I know we have a SBA gentleman on the thing, so Steve, feel free to comment. But the interest rates on the SBA 504 loans are very reasonable right now, and new SBA loans, the first 6 months payments are forgiven. They're paid for by the government. So, that may be a better way to go.
Yeah, and I think that's it. If you were talking about using the funds to go, buy another building at some point you hit the nail right on the head, Terry, but there are other products that are available for you to do that. And the 504 loan is a fantastic loan if you're going to buy real estate for your business, because you can get 25-year terms. So you get very long terms on that. And it is generally at a very low interest rate as well. I think the last one we saw was 4.75%, and that was about 3 months ago.
Yeah. So we had one in the chat thing. If you received an EIDL grant, can you still use the EZ application if you qualify under one of the 3 conditions? Well, if you received an EIDL grant,
it's 2 different programs. Yeah.
You don't have to pay it back, and that's going back and forth. Your EZ application is for the PPP loan.
It's for applying for forgiveness for the PPP funds. Yes.
Yeah. So yeah, the answer would be yes, correct?
Yes.
Yeah. Okay. All right. I'll let Steve talk about what we're going to do with this webinar.
I hope we didn't create a lot of confusion there.
That was fun. I like it.
Well, I tell you, this is the CARES Act, and all these programs are the programs that just keep on giving. It seems like every week the goalposts move a little bit, and it's funny. Terry and I were on a webinar with a different industry group earlier today, and we had a nationwide SBA banker on with us, and they were saying, the bankers are very frustrated, by all the various changes that are taking place. And it is one of the downsides of all this, but
Yeah, I mean, if you guys don't hesitate to ask the questions. I'm in Cincinnati, Ohio, and did a presentation this morning, and went over this exact same stuff. Really, I used the slide deck from last week, and I got a ton of questions. We had one guy in the room that runs a big company, and he never applied for the PPP loan. He's like, oh, I don't know, it's just going to be complicated. It's like, it's one page,
3 boxes.
Yeah, so if he gets it done, I made him $500,000 in an hour and a half presentation. So it's probably a pretty good return on his investment.
All right. So listen, folks, here's where we're going. We know that there will be some additional, changes and interpretations of the various rules as the whole forgiveness process really begins to take hold over the next several weeks. So our commitment to you as the audience is we'll continue to keep you guys updated on all of the changes that we learn every week. So that'll happen. But we're moving the webinar. So next Friday, we're not going to do one on July 3rd due to the holiday weekend. We know a lot of folks may take the opportunity to get out as we've all been cooped up for much too long. So we will not be meeting next Friday. We are also, due to feedback that we've received, we're going to move the webinar to Thursday afternoon at 3 o'clock. So 24 hours up on the schedule, and we'll resume again on July 9th of 2020. And there will be a new registration link. You'll see it here, and we will email it to all of the previous participants as well. And you'll only have to sign up one time, and it'll give you the code, and due to some of the new security stuff, it'll get you right in and have your seat reserved on future webinars. We would like to ask you that between now and July 9th, go to businessprofitimprovementplan.com. We've got some really interesting tools in terms of how to improve the profitability and improve the financial operation of your business. We would like to ask you to go to that site and review that. We're going to begin to talk about it beginning on July 9th. So we would love to have your educated questions out there and be able to help address those for you as we move forward. Finally, we'd just like to ask you, open question today, right now, what information or resource would help you the most with your business? What can we bring to you in the future webinars and webcasts that would be of the most value to you? So if you just take a minute and shoot us something in the chat or in the Q&A and tell us what's most important to you, we'll go out and get the resources and put them together and bring them to you on our future webcasts. Crickets? Are we hearing crickets?
Okay, thanks, Steve. Well, let's start to chat a little bit and begin the close-in process. And I do see we do have comments coming in on the Q&A box regarding what participants would like to see going forward. But what I'd like to do as these comments are coming in is to start the process of the wind down, and that is with Steve, you and Terry both just kind of giving some sort of wind down comments. And Terry, I think I'll start with you.
Sure. So, like I told these guys in my presentation this morning, you have to think about cash flow. Think about your cash flow. One of the gentlemen, one of the participants in this morning's meeting was like, I just don't really think I need the loan. Well, now in this time that we're in, anything you can do to improve the cash flow of your company and preserve cash, you need to be taken advantage of. We don't know what's going to happen with this COVID thing in the second half of 2020, say September or October, and don't not take advantage of any of these programs now and wish you would have taken advantage of them, 6 months from now. So, and just to throw it out there, like I said, I am in Cincinnati doing a public speaking event. If any of you need a public speaker for an association or your Rotary Club or whatever, keep me in mind. Happy to do so.
Yeah, Terry does a great job, and it's so true. I mean, if you think about it, I don't think anybody on this call would have said back in the end of February Man, I sure think we're all going to be on lockdown for the next 4 months. We would have never even considered that as a possibility, and who the heck knows what the next 6 months are going to bring, right? We all see the news media screaming about infection rates seem to be jumping up in some states. Knock on wood, fortunately, we're not experiencing that here right now, but who knows what'll happen. So I think Terry's really given you very, very wise advice. Take advantage of everything that's available to you. It comes to you at very low cost, and it certainly gives you some safety and some security of being able to sleep at night and not having to worry about what may happen to your cash flow in the future.
Yeah. And Steve, you mentioned it on the front end, but I'll ask you as you make your final comments to remind everyone of the deadline for PPP. It's relatively urgent if you haven't applied. So Steve, I'll turn it over to you for your final comments.
Yeah, absolutely. June 30th, Tuesday evening, the SBA is not going to take applications after Tuesday evening. So we were on with a local bank about an hour and a half ago. They've quit taking applications. So they were a large local PPP lender, and they have already stopped. If in fact you need to take a PPP loan, want to get an application in, and you talk to various lenders and they're not helping you, we've got a long list, and we're happy to share that as well. So.
Okay. Some people also have indicated that they'd like to send questions and give us recommendations for information that would be most helpful for their business as a follow-up. Steve, what email address or how would you like them to communicate that to us if they don't get that into the Q&A box before we close down here today?
Yeah, so they could send it generally out to info@innovativeba.com, or Terry's is terry@innovativeba.com. Mine is sdenny@innovativeba.com. And Marquita is marquita@innovativeba.com. You can go to our website, innovativeba.com, go to the About page, and all of our email and contact information are listed there as well. So we're relatively easy to find. Twitter, Facebook,
LinkedIn.
YouTube.
Yeah.
We try to be easy to find anyway.
We can't hide.
Great. So we've got some really good recommendations here. Steve, would you like me to read them out to you?
Sure. Yeah. Let's talk about them with the group. And I'm not quite sure how many people we've got on today, but
so we still have 21 on at this point in time. So Scott would like us to address effective email marketing.
Okay.
Maddie, she's saying what we've been doing has been very valuable, so keep it up. Christy would recommend utilizing, or this is really a question, would you recommend using the employer side payroll tax deferral option? I have not taken it yet, so that's really a question that she's posing. And that's something we could actually focus on more. We did have a payroll processing partner, an accounting and payroll processing partner on in an earlier webinar, and we could revisit that. What do you think, Steve, Terry?
Absolutely.
Yeah, because I think the answer on that, Christy, is if you take in the PPP to pay all your payroll taxes, and that's been forgiven, I believe she told us that you can't take the payroll tax deferral option. Well, deferral's not necessarily saying that it's forgiven. So I might step back a minute on that and say, I don't know, Steve, what you thought? There was something about you couldn't do both.
You couldn't do both at the time, but I think the other thing to keep in mind, folks, is there is a lot of talk about additional stimulus or additional aid programs in the pipeline as well. So we're continuing to monitor those things also, and we'll keep you apprised of that stuff as we go forward. The other thing that there has been a lot of talk of this week is there apparently is a meaningful discussion about the IRS potentially pushing back tax day again as well. So it not being typically July 15th. Now I know the Trump administration is trying to get Congress to agree to a basically suspension of payroll taxes. So I know that's one of the key issues they're pushing on. So we'll just have to wait and see. But I feel certain that something more is coming.
Okay, great. Steve, was that your final comments, or are we going to hear more from you relative to a wind down?
No, I guess what I would say is,
okay.
Yeah, we're definitely done. We think it's all about cash flow at this point in time. Pay real close attention to the gross profit and the cash flow of your business. We want to give you some tools and resources to help you do that. And again, the audience is most important to us. So tell us what you want to hear, and we'll go find the right folks to bring to you in that regard.
Okay, so with that, we'll begin the close down. And as Steve mentioned, we will not meet next week. Happy 4th of July, everyone. Enjoy your holiday. But we'll see you again on Thursday, July 9th. And there'll be a substantial amount of emails and other information coming to you to get you registered for our next webinar on July 9th. Have a great weekend and have a great 4th of July.
Thank you all.
See you, everybody.